The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we took a look at Tuesday's market trade action, we saw soybeans and soybean meal this time. They were the star of the show, with bean oil taking a little bit of a back seat, while the corn market largely didn't move. Wheat was a little under pressure. What is going on in these markets? What do we need to take away from things? Here to help us make sense of it, we welcome in Tyler Schau with agmarket.net, joining us here for our market analysis today. Tyler, always good to have a conversation with you. Hope things are going well up there in North Dakota for you.
Yeah, it's been a couple beautiful days in North Dakota. Looks like it's going to stay this way for another week. Should give farmers a pretty good chance to make a pretty big dent in this corn crop now that they're trying to hammer away on.
Yeah, and I know we're seeing the national report. Soybeans have moved along very quickly. We're 3/4 of the way done there, basically. Corn a little behind, not too surprising though. Is that kind of the read you have on things across the Northern Plains and the Dakotas? Beans getting done and now starting into corn, and I think about other crops too, sugar beets, etc. Is that kind of the read you have on things in the Northern Plains, Tyler?
Yeah, most of the producers we work with were wrapping up beans late last week. There was a slight rain event in some locations that got pushed back. They're probably wrapping up in the next day or so. Just in the early stages of getting rolling on corn, but some pretty good yields that we're getting reports on really across the state. To be right honest with you, so I would I know this wasn't the question. One of the things that we highlighted as kind of a caught us off guard in the last WASDE report was the USDA had the North Dakota bean yield down, I think like 4% from a year ago, something to that effect. And that caught us off guard. We're kind of expecting a bigger yield than we saw last year on beans and on corn. So kind of a repeat of what we saw in that spring wheat market as well. We had great growing conditions, not for every part of the state. I know, might be someone watching that would argue they didn't have, but as a whole, the state had a really good growing year, which was needed. It takes a tough breed of individual to be a farmer in North Dakota.
That it does.
So they needed they needed a little bit of some cooperation this year.
Well, it sounds like they got it. And, you mentioned that WASDE report we had last week, and it's funny sometimes when after all the flurry of the headline numbers and more, and we drill down into some of the numbers that USDA gives us, and we find little nuggets, little Easter eggs, like those numbers you alluded to for North Dakota. And it makes traders and folks kind of pause a little bit, but two, it also contributes to, maybe some residual news in the market potentially. It's just interesting to find some of those little Easter eggs within the WASDE report once you really dive into the numbers, Tyler.
Yeah, and they're not always there, but you're right. It sometimes can create a little some questioning of what's going on. But in the end, we've got to always remember that that's an awfully big job they're tasked with taking on. And it would be tough to be absolutely perfect. And who knows? At the end of the day, maybe we're wrong, they're right. So we'll just have to kind of keep an eye on it as it shakes out. But like I said, we talked to producers across the state, and they're awfully pleased with the yield monitor on their combines.
Good points. All right, let's talk this market overall. And it feels to me, I'll start with the soy complex, but I think we can make this case for corn and wheat. I'm curious your thoughts here, but we can break this down. It just feels like largely all of these grain markets have either psychological or chart related resistance that we're kind of bumping up against, that we don't necessarily have something um, we don't have enough news that's feeding the bull to push us through. Is this a case of chart resistance? Is it psychological? Is it both? What's your take on that, Tyler?
I think you could make a case for it's both. One, chart resistance. On a lot of these charts, you've got some pretty significant moving averages that it feels like the managed money funds have been selling. Minneapolis wheat is not one a lot of people pay a lot of attention to, but really for the last 3 months, 2.5 months, every time that price gets anywhere near the 20-day moving average, a flow of selling enters into the market. That's just one that we went up right to it today and sold off and came back down, about a dime, a little over a dime off the highs when we hit that 20-day moving average. We've seen it in a lot of other markets here recently. They were doing the same thing on beans. We actually did get a close, or are going to get a close over the 20-day on beans today. But there you could come in and say $13 is kind of that psychological resistance. Now, we toyed with it. We were up above $13 for a little while during the day and just couldn't hold there. So I think some of it's psychological. I think you're right. The bull needs to be fed. We've got to get some type of news to come in that's not just kind of, it feels like any bullish story has just been kind of churned and rechurned here for the last 2 months, right?
Yeah,
Yesterday, yesterday we got good inspections, but as Brian Splitt's famous for saying, inspections are only good if we got new sales to go along with it, right? Because all that is just a filling of the existing sales, and sales are lagging right now. So people keep trying to point to the same stuff. Yes, it's dry in Brazil and Argentina, but there's a lot of time between now and when their combines are going to roll. So we just there needs to be some type of a trigger or a spark, and we just don't seem to get it. And so yeah, these markets are really, in my opinion, been pretty stagnant for the last couple months.
Well, and the latest with the soy complex, I'll focus in on that a little bit more. I know beans and bean meal higher on Tuesday, to your points, and Monday we had those NOPA numbers, highest crush in September. Bean oil stocks were the lowest since December of 2014. So we saw bean oil surge on Monday, and then I come in here Tuesday, bean oil's a little lower, bean meal's a bit higher. So I'm wondering, was it some intermarket spreading in the products there? But to your points, we fed the bull a little bit to get us back to resistance overhead at $13 no-fee beans. But it appears that though the NOPA story, the NOPA numbers, wasn't enough to push us through some of these key resistance levels.
Yeah, it pushed us right back up to, basically the highs that we saw post WASDE report last week. Maybe it's the $13 resistance. Maybe traders just need to see a close over 13. That would invite some more buying in. You can slice it a lot of different ways. I will say this: we need the crush. Exports are behind. They're considerably right now. The USDA is projecting them to be higher than last year's, or the 22-23 actual. But that's far behind where we were in 2021 and 21-22. So, we're lagging on our export sales. So we need to see that pick up. That's going to be difficult because you've got the Mississippi River now that showed record lows on the Memphis gauge earlier this week. So that's going to make the export market just more difficult to push a lot of product through and make sales through. So we need that crush to run it as good as it can. But that was a surprise. Caught a lot of people off guard that try to estimate where that NOPA crush is going to come in at. But at the end of the day, there's only so much we can do to maximize that number as well. We do got some new crush plants that are coming online, but it feels like even those, they have an estimated date of when they're going to open, and they just kind of keep getting pushed back a month here, a month there. And so it'll be interesting to see how it plays out. I still, that's a good positive story. So don't want anyone to take this the wrong way. That our crush is going to grow. We need it to grow to take over some of those export bushels we're losing. but it's gonna remain kind of a slow process to see that take over. We can lose exports a lot faster than we can build crush capacity. We'll put it
Good
that way.
thoughts. And I feel like in the meantime, that's leading to maybe more farmers storing on farm if they got the storage capacity. I'm hearing a lot more of that here this fall than I thought we would, Tyler. A lot of guys saying, you know what, I got the room, just the way basis is, and et cetera, et cetera. They're throwing a lot more in the bin than I think a lot of people thought.
Yeah, they are. I mean, I never like telling anyone what they should do in their business. I always tread around this lightly, but I mean, for the most part, the farmer has some cash in their pocket. The last few years have been pretty good to the producer with prices, and so as far as needing to sell, a lot of them that I talk to don't need to sell.
Mhm.
One of the things that we do try to talk to them about is you might not need to sell, but we're in a we're in a carry market right now, and we haven't been there for a few years, right? We've been in an inverted market where the upfront contract is higher than the back month contracts, and it's amazing. We kind of forget how to market in these carry markets, so we haven't seen them for a few years. But typically in a carry market, when November beans go off here, wherever they go off, let's say they go off at $13, right? And your January and your March are higher than that. A carry market's job is to pull that March and January contract down to the level where November went off, right? So if you are going to store it, make sure you've got a plan in place to sell it. And that's one of the conversations we've been having a lot with our customers is, okay, if you want to store it, we get it. You got the bin storage. You don't need the cash now, but we need to have a plan in place to take advantage of those higher prices that are out there right now in those back months, or some method of protecting that. Because I talk to a lot of producers that really feel that prices have got to go higher, and they might. I'm not here to tell you they're not, but I just like to remind them they don't have to go higher. They can work lower based off bigger crops elsewhere, lack of selling, or some type of swan event we don't see coming.
We're having a conversation today with Tyler Schau from agmarket.net. Tyler, as well, let's talk livestock and kind of the same question I asked earlier with the grains. When you look, especially at the cattle market, I think that's where we should start. Uh, is it chart resistance? Is it psychological resistance? Have the funds just said, all right, this cattle market's gone high enough and it's time to take profit and move this thing lower? I mean, what is it? Because it really feels like this cattle market has kind of topped out here the last couple of months.
Yeah, it got really high there in September. Here's another example. I just pulled up the December fat chart, and for the last 4 days, December fats have tried to make a run, and they get stopped at that 20-day moving average. There's some selling coming in there. It feels like right now in the spot cash market feels pretty good. A lot of packers calling around trying to find cattle. Show lists are extremely light for this time of year. So the actual number of cattle ready to be harvested right now is just simply not there. That's nothing new. We've been talking about that for a long time. You can make the case where both the cattle and hogs production is expected to increase from the third quarter into the fourth quarter. So there's some cattle out there that will be coming to market here in November, December that are ready to be killed, and same with the hogs, and that could be adding to some of this pressure in this market. But I think a lot of it ties back to this demand story that I almost get kind of tired talking about it because I talk about it on all the anytime I do an interview. That's really the side of the protein market that can wreck this thing is once the
Mhm.
consumer stops buying. And you could point to a lot of stuff. Read article the other day where defaults on credit card loans are starting to inch up. You've got some massive debt out there amongst the consumer. You've got interest rates pushing 8% for operating loans. You got mortgages that are extremely high. So a lot of pressures there. And you could you could look at all kinds of different things in the overall economy that would be concerning. And so I suppose, that's got this market kind of just on edge, just kind of doesn't want to take a lot of risk, and probably seeing some of those, managed money was very long the cattle
Mhm.
market, fat cattle and feeders, and they've probably likely just kind of step into the sidelines. I don't know that they're trying to get short those markets, just taking some profits, stepping out of the game, and putting that money to work somewhere else.
Hog market too. I know we're on to December now is the front month, holding a pretty decent discount to the cash trade. Do you feel like cash is going to have to come down to the futures or the opposite here in this hog market right now, Tyler?
I think cash. I think you'll probably see a little bit of both. I could see cash coming
Okay.
down, but I don't think it's going to come down that far. We're real close to the low we put in back in May, which was like lower $67. I think today we settled at 67.55. So we're real close to the May lows. And if you recall, late May, that was when corn was grinding higher, and then corn started to sell. Excuse me, the corn actually. Excuse me, I got my months messed up there. Late May, the hog market all of a sudden went on a tear, and really within a
Hmm.
month we were up about $10 a hundredweight. And I'm not saying that that's going to happen, but I just we're pushing down on some lows. Maybe we find some support there, some technical buying, and see how that shakes out.
Tyler, great thoughts. Before we let you go here today, anything final you would share or reiterate to folks here as they kind of watch these markets chop around a little bit and be stagnant? A lot going on. What would you say to folks to wrap it up today?
I'm going to stick with kind of the message I've been telling a lot of my customers, and any chance I get is um, you know, I don't want this to come off as we're super bearish, sky is falling. But longer term, there's just not a lot of news out there to make us super bullish any of these grain markets. So we want to be aggressive, getting some sales made, and while we're at it, we kind of want to take a look at getting some 2024 crop hedged. You still got prices that are relatively, that are better than what your current prices are now. So we think it's prudent to be taking some action. If you don't want to sell it, there's plenty of ways to remain flexible and put some coverage underneath of it, leave the market open to the upside. But it's definitely a conversation you should be having.
Well, if folks want to have that conversation with you or anyone else on the agmarket.net team, I know they could find you guys on your website, of course, phone call. You guys have a great app available too. There's a lot of ways to get in touch with you guys, isn't there?
Yeah, check us out on the internet. All of our information's there, and yeah, we'd love to help you with your marketing program, and see if we can offer any services you might need.
Agmarket.net, the best way to find them. With that, Tyler Schau with agmarket.net. Always appreciate a conversation. Thanks for joining us on Market Talk today. Have a great one. We'll talk to you again soon.
You bet. Take care, Jesse.
And that is going to do it for the program here today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.